Imagine a company with the influence of a Google or an Amazon, granted a state-sanctioned monopoly and the right to levy taxes abroad. Along with that, an army greater than the size of the army of Great Britain at the time. Welcome to the Why in History. I am Ajay Kaul, and today we're talking about the first modern corporation in history, the British East India Company. The company that exercised significant political, economic, and social influence across the East Indies and Europe for a significant amount of time. On December 31st, 1600, Queen Elizabeth I granted a charter to a group of London merchants. This historic charter bestowed exclusive overseas trading rights within the East Indies to this group of London merchants. These London merchants who would go on to form the British East India Company. And the East Indies was the term used for the massive land area stretching eastwards from the Cape of Good Hope in South Africa. What this meant was that the British East India Company would be able to exert considerable influence over trade within Asia and the Pacific. What the British East India Company was essentially doing was that it was joining the competition to exploit the vast resources nestled within the East Indies, and the Dutch and Portuguese had already made forays there. Within India, China, Persia, and beyond lay precious spices, textiles, jewelry, and tea, which were widely sought after by the Western powers. And with the granting of the charter by Queen Elizabeth I, essentially, Great Britain was throwing its hat in the competition with the Dutch and the Portuguese. However, just 2 years after the formation of the British East India Company, the Dutch East India Company was formed, and it too was granted monopoly over the Asian trade by the Dutch government. The Dutch did not waste much time in asserting their supremacy, and by the end of 1603, they had established a permanent trading post in Banten, which is modern-day Indonesia. Throughout the 17th and the 18th centuries, there were military entanglements between the British and the Dutch, but the Dutch stronghold over spice trade continued, and the British East India Company finally reconciled itself to focusing just on India and China in that region. The British East India Company functioned primarily based on a factory system. Basically, representatives or factors were tasked to set up trading posts to source and negotiate with the locals. The first engagement with India happened during the reign of James I of England, who sent his envoy, Sir Thomas Roe, to the court of Mughal Emperor Jahangir. Between 1612 and 1619, Sir Thomas Roe secured permission for the British East India Company to set up a factory or a trading post at Surat on the west coast of India. And then, in May 1661, Charles II of England married Portuguese Princess Catherine and received Bombay or Mumbai as part of the dowry. And subsequently, Bombay replaced Surat as the primary East India Company trading post on India's west coast. By 1690, several trading posts had sprung across India's coastal areas, from Madras in the south to Calcutta in the east. While the British were still setting up posts in different locations across India, the Mughals, as late as 1739, still presided over a vast empire that stretched from Kabul to Madras. But in that year, an incident happened that would have an impact on the economics, politics, and the society of India. In 1739, the Persian conqueror Nadir Shah descended the Khyber Pass with 150,000 strong cavalry and defeated the Mughal army of 1.5 million men. 3 months later, Nadir Shah returned to Persia, carrying with himself treasures of the Mughal Empire, which included Shah Jahan's magnificent peacock throne, the Kohinoor diamond, and approximately $100 million worth of gold, silver, and precious stones. So this plunder by Nadir Shah virtually brought the Mughal Empire to its knees economically. And as a result, the center lost its authority and the princely states became more autonomous, and they started forging economic and political alliances on their own. And one of the major beneficiaries of the regional alliances was the East India Company. A major turning point in East India Company's transformation from a profitable trading company into a full-fledged empire came after the Battle of Plassey in 1757. The Nawab of Bengal, Siraj-ud-Daulah, was angry with the East India Company for skirting taxes. So 50,000 Indian soldiers under the Nawab of Bengal fought against just 3,000 men under the command of Colonel Robert Clive of the East India Company. The Nawab of Bengal, Siraj-ud-Daulah, lost the battle decisively when his commander, Mir Jafar, switched sides and refused to fight the British. But Mir Jafar was merely a pawn, whereas the actual kingmakers of this battle, who were ultimately responsible for the defeat of Siraj-ud-Daulah, were the bankers of Bengal. Yes, the Oswald Jans were the influential bankers who financed the government of Siraj-ud-Daulah, and they were not too happy with him. Led by a man named Jagat Seth, their concern was that Siraj-ud-Daulah was not mature or knowledgeable when it came to finance and did not apply any rule of the law when borrowing from the bankers. Okay, but why did they side with the British? Well, they had done business with them in the new trading post of Calcutta, and they were impressed with the rule of the law that the British followed in their dealings. So it is said that it was Jagat Seth who actually brokered the deal between Mir Jafar and Robert Clive. The victory at Plassey gave the East India Company taxation powers in Bengal, and Clive subsequently became the governor of Bengal. The treasury of Bengal was plundered, shipped to London, with Clive keeping some for himself. But this was an important turning point in the history of the East India Company in India, because all of a sudden, the company started looking at land taxation as another form of revenue. The big break, though, for the East India Company came in 1765 after the Battle of Buxar, in which the combined army of the Mughal Emperor Shah Alam II and the Nawabs of Bengal and Awadh were defeated by the East India Company led by Hector Munro. The defeated Mughal emperor was forced to grant the right to collect land revenue in Bengal, Bihar, and Orissa to the East India Company. And with the grant of this right, the stock price of the East India Company virtually doubled overnight. And when the British MPs argued that the treaty signed by the Mughal emperor belonged to the crown, the East India Company was able to successfully defend their ownership of the agreement. How? Well, the members of parliament who voted in favor of the East India Company were not really neutral. nearly a quarter of them held stock in the East India Company. And by voting in its favor, they were merely ensuring that the stock price continued to rise. Yeah, the nexus between politics and business had started in the 18th century. The East India Company bubble burst soon after when Bengal suffered a massive famine between 1769 and 1770, which led to a massive shortfall in expected land revenues for the East India Company, or EIC. It was left with a debt of 1.5 million British pounds and a bill of 1 million pounds in unpaid taxes owed to the Crown. And as soon as this news became public, 30 banks across Europe collapsed. Yeah, we are still in the 18th century, and several banks collapsed. Following this, in July of 1772, the directors of the East India Company applied to the Bank of England for a loan of £400,000. The Bank of England could only raise £200,000, so the EIC directors went to the government asking for a bailout. Yes, you heard it right. In 1773, the world's first aggressive multinational corporation was considered to be too big to fail and was saved by a mega bailout by the British government. Along with bailouts come governmental controls. So in 1784, the historic India Act was passed in the British Parliament, which formalized the state involvement in governing the East India Company's land holdings in India. This moment is regarded as the proper British Empire taking hold in India. The government also appointed a board of control to oversee the day-to-day operations of the EIC. So what was it like to be working for the East India Company? The EIC was one of the largest companies at its time and was a joint stock company. From an employee perspective, it was a very sought-after company, and there was fierce competition to get a foot in the door, but it bordered around nepotism. Nepotism meaning, even for manual labor jobs in the warehouses, you needed a nomination from one of the company directors. EIC had 24 directors who were chosen from a pool who had at least 2,000 British pounds worth in company stock, and these directors were elected annually. And no surprise, the number of job applicants always exceeded the number of vacancies. By the year 1800, EIC realized that selecting employees based mainly on patronage was not a very good strategy. So they switched to something like an employee boot camp. In 1806, the company opened the East India College in Haileybury to train new clerks. On the curriculum was history, the classics, law, and some languages like Hindustani, Sanskrit, Persian, and Telugu. Today, it is known as the Haileybury and Imperial Services College. Over and above the standard salary, the East India Company offered some interesting perks to its employees. One of them was that those who were headed abroad on the company's behalf were allowed to conduct private trade for themselves outside of their company dealings. They even got space on the company's ships to bring back the goods that they had purchased. Now, let's not underestimate the importance of this perk, because the demand for goods from India and China was very high. And if an employee set on a voyage to China or India, they could be set up for life. And what the EIC was doing here was keeping the salaries at a reasonable level to keep its cost base low and incentivize the employees to expand their avenues for earning. Another interesting perk was the opportunity for insider trading. Officers in India with the on the ground knowledge of the market would send orders back to Britain to buy or sell stocks, just ahead of the public finding out the necessary piece of information to facilitate that decision. Going by how well the stock was doing, this was a very attractive perk. So, what was the economic impact of the East India Company's presence? One key impact was the advent of fashion and trends in England and Europe. Before the East India Company, most clothes in England were made out of wool and designed for durability, not fashion. And this changed as British markets were flooded with inexpensive and beautifully woven cotton textiles from India, where each region produced cloth in different colors and patterns. So when a new pattern arrived, it would suddenly become all the rage on the streets of London. And once consumers had more choices, there was some element of volatility brought into the markets because what was trendy today could become obsolete tomorrow. But most importantly, the British East India Company established a global trading structure for Great Britain. Between the years 1660 and 1690, the EIC imports from Asia increased 300%. English merchants constantly faced the challenge of what to trade for the spices and other goods they obtained from Asia. England's key export was woolens at the time, but that had limited appeal for local traders in the East, which meant that the EIC had to rely heavily on silver bullion for the trade, which meant if all variables stayed constant, the reserves of gold and silver bullion in England were constantly in a state of depletion. But once the East India Company exercised its military might and acquired lands in India or gained favorable terms of trade with China post the Opium Wars, the balance of trade shifted back in England's favor, with the newly acquired colonies in North America and Asia becoming a market for finished manufacturers from England and Europe and a source of key staple commodities. But as the global markets opened, the British politicians realized that they could make even more money by bringing in more traders into the markets rather than relying on just one monopoly. And after the mutiny of 1857 in India by the Government of India Act of 1858, the British government took over the assets and administrative powers of the East India Company and established direct control over the Indian subcontinent. By the year 1874, the East India Company had ceased to exist. Well, not completely. A tiny rump of the company continued to exist as a small tea and coffee entity. And irony of ironies, in the year 2005, the East India Company was acquired by Indian businessman Sanjeev Mehta, who has converted it into a consumer brand which sells various varieties of tea, coffee, biscuits, and even coins. And if you're interested, do look up the website, theeastindiacompany.com. And it is on that note that we end this section of the program. On to the quiz section. Question from the previous episode. Which Hollywood movie is said to have been financed by money laundered from the 1MDB fund? Ex-Malaysian PM Najib Razak's stepson, Riza Aziz, was the producer of The Wolf of Wall Street. And it is said that a lot of the movie was financed via funds laundered from the 1MDB fund? So the answer is A, the Wolf of Wall Street. Question for the current episode. What was the primary factor in the demise of the East India Company? Was it A, the bailout by the British government in 1773? B, the EIC filed for bankruptcy post the 1857 mutiny? C, Adam Smith's Wealth of Nations brought about the concept of open markets? Or D, allegations of corruption clouded its reputation? Once again, what was the primary factor in the demise of the East India Company? A, the bailout by the British government in 1773. B, the EIC filed for bankruptcy post the 1857 mutiny. C, Adam Smith's Wealth of Nations brought about the concept of open markets. Or D, allegations of corruption clouded its reputation. The answer will be provided in the next episode. That's all we have in the current episode. In the next episode, we take a look across the nuclear spectrum and find out how some of the rogue nations were able to gain access to nuclear technology. And if at all, there were a few nations who were blocked from gaining access to nuclear tech. Till then, stay safe and keep looking for the why in history.